Hello everyone and welcome to the Levi Spade Show. Back again with another video on investing. Have you guys seen the markets lately? It's just blowing up. Just up and down, not knowing which way it's going to go. And you're probably just holding on for dear life. I mean, have you peeked into your portfolio lately? I know I have and just wanted to cry. The good news is that markets recover. Overall, the stock market will make bigger gains and be even higher highs. So don't give up. Even Warren Buffett sees this time as an opportunity to buy more stocks and to get into the market when businesses are at a really great deal. So this is the time to really step up your game when it comes to investing. Continue to learn on how you're going to trade your stocks and get really confident at a strategy. You know, all these great investors, they have some way of figuring out a system to know when to buy and when to sell. And one of those ways that investors use in their toolbox is the 50 SMA. And that's why I wanted to take this episode to share with you guys whether the 50 SMA is good to use as an indicator or not. Now the 50 SMA is just simply the simple moving average. And you can think of it like the 50 last closing prices for the stock and taking that, adding them all up and then averaging them out and dividing by 50. So here is a information technology sector breakdown for the past month. You can see that Infotech has done really well compared to the S&P. Reason why I bring this up is because the S&P is a very good benchmark, has done consistently well decades and decades as time has passed. It's very, very hard to beat the S&P. Stocks rarely beat it over the long run. I want to show you the loser here in the past month. And you can see is the big downtrend over the past month. With that crisis, you know, it was hanging there with the S&P, but now it's just taking a nosedive right with the S&P. With your broker, you can pull up the same type of chart. I'm sure you can do this with Charles Schwab's, with E-Trade, with all the other ones out there. They'll break down for you for the different time frames how these sectors and industries are doing compared to the S&P. The IT services industry, you would have thought would be doing much better than the sector overall. But actually, the information technology sector has actually outperformed the IT services industry as a whole. So eye-opening. IT services industries actually underperforms the tech sector last month. So it's just something for you to see. Obviously, technology always does pretty well, it being the most volatile, but has done a lot of growth over the decades. Now, I bring up trade strategy because this is a time where it's very, very close to where you could be making very good entry for your positions. And it's very important to have the timing down and to know when to buy and sell. Even through my mind, emotions are all over the place and it's hard to focus on one particular set of guidelines for when you're going to buy and do that next setup for something you're going to be hold for potentially weeks or months. Too many indicators, so many different studies out there, things you can add to your apps and the charts on your websites. They all begin to look like spaghettis. Trade strategy will really simplify and really keep you focused on how do I look at a particular stock chart. And people distracting you, coming up to you every single day with their new stock picks for what they think is the best that's going to be happening, the next new craze. having a particular thinking and mentality, knowing how you're going to enter and exit a trade, will help you filter out and lessen the noise from everyone around you trying to get you to adopt their strategy or a way of dealing with stocks. Now, with a trade strategy, you also have to have the element of timing. And that just simply is the buying and selling and being patient. That's probably the most difficult part of investing. The different instruments you could look at would be the S&P analysts, who are pretty good and spend a lot of their days looking into businesses and stocks. Sentiment, which are the mass populace out there, they also have a wealth of information that might be insider information or knowledge in that particular sector or industry. They've traded for years and years, so they kind of know sometimes the patterns that stocks do. And then the 50 SMA, which today I'm going to give you some examples and show you how people look at this particular indicator. What is a 50-day SMA? The 50-day moving average is a popular technical indicator which investors use to analyze price trends. It is simply a security's average closing price over the last 50 days. I included a chart from TD Ameritrade here for you. The green line is that 50 SMA that is overlaid over this price action chart for Google. And you can see for the past year that it's actually stayed well above the 50 SMA, except for that one little time there it dipped below. But for the most part, it stayed above it. So you would have made a nice gain if you were in a position with Google. Now, I included the word security in the definition for the 50 SMA. So what is a security? A security is a financial instrument, typically any financial asset that can be traded. Equity securities, which include stocks, debt securities, which include bonds, banknotes, and derivatives, which include options as well. There are two types of options, calls and puts. So this is very a basic definition, but I'll be using examples of stocks because they're simple and easy to understand. So here's an example of an entry example for Facebook. I have this at a 6-month chart, and you can see that again the green line you see on the chart is a 50 SMA, and I've circled in green there for you at the bottom left an entry point where you would have entered a position because the price action moved above the 50 SMA, and you would have been right there because you would have seen that the price action overall would have been and stayed above the 50 SMA. Now, when the price action dips below, that is when it is an exit example that people use with a 50 SMA. This is a Cisco Systems Inc. price action chart, and you can see here that when it dips below, investors would have sold and it would have saved you a lot of headache. The price action went down and you would have saved quite a few months of time with your money decreasing in value for that particular investment. You might have heard the term golden cross and looked for some type of icon or emoji of a cross, but not seen one. Well, here's an example of where investors took two moving averages, one being 50 and one being 200. So a much longer, 4 times the time period. And when the shorter moving average rises above the longer moving average, they call that a golden cross. And because it's such a good sign of that particular equity increasing in value, that investors really like that. So you can see here in this example for Cisco that you would have made a nice profit and it's seen an upward trend in this particular time. On the flip side, if you see the longer moving average dip below the shorter moving average, then it's called a death cross. In this particular example, it's a 200 SMA moving below the 50 SMA. And you would have been right to sell out of this position because for General Electric, for the next couple of years, it decreased in value and you would have lost a lot of your investment there. So that's why a lot of people pay attention to the death crosses. Not only longer SMA are used, but shorter SMA for traders who want to do more trades and be a little more sensitive to the price action of a stock. Here's an example of Netflix with the 15 SMA and the 50 SMA. Here back in November, you would have seen that the 15 SMA moved above the 50 SMA, and you would have been right where the 15 SMA did not dip below the 50 SMA, and you would have made a pretty good profit from this particular investment over the past few months. So far, we've been looking at different lengths of SMA moving averages. Some more advanced investors, they use the SMA in combination with other indicators, and one of those happens to be volume. And they can see here in the two examples that I've highlighted in red for you, these are time periods where there was higher volume. Investors or people who like to look at the amount of volume being traded will use the volume also in combination with the SMA. Some people think that certain stocks, it's powerful and effective to use volume with the SMA. May not work with all of them, but may work for the particular stock that they're paying attention to. This may be a term that you guys aren't used to or heard of yet, but backtesting is a powerful tool that investors use in their tool belt. The questions they ask themselves is, does the stock stay above clearly? And some charts are messy. Price action doesn't really respect or follow the SMA that you like. Backtesting really helps to figure out if your trade strategy works with that particular stock. So this is a very basic way of analyzing a stock and seeing if you're going to actually profit from an investment. With that, you can see if there's a start, an entry point, and an exit point, if it actually makes money for you or actually causes you to lose money. And you can see with backtesting if that's going to happen. To continue that thought is winning ratio. You can see if you take a little more time and put down the dates and the prices of the stock at particular points when your trade strategy tells you to enter or exit a position, you can tell right away this particular system is going to have me win at a 65% ratio or a 77% ratio. You can put some type of ballpark number or percentage in there from backtesting, doing a little more research. You don't ever want to just use one indicator, such as a 50 SMA. It's always powerful and very effective to use multiple confirmations. And that's what advanced investors do whenever they invest their money. They see returns over the long run when they follow that and are consistent. With all of that, is the 50 SMA useful or effective? In my thinking, yes. Yes, multiple studies and papers from big companies have proven that the 50 SMA is very effective. You will see profits if you follow in some way, shape, or form the 50 SMA. Now, not alone, but in conjunction or combination with other indicators. Yes, shows the overall trend. May not show the complete picture, but the 50 SMA will show you the past 50 closing prices or opening prices of the stock and paint a picture for you. It won't have all the jagged up and down of a daily chart. It'll have a nice plotted line and show you the trend for that particular stock, whether it's going up or down. Kind of tell a different story. I also think that it is a yes when used with other indicators. Back to my thought of building a trade strategy where there's multiple indicators, 3 or 4 of them, that will confirm each other and not cause false starts. or a poor win ratio where you're actually losing money when you follow that strategy, enter a position, exit a position. And yes, incorporate it into a trade strategy in some way, shape, or form. If you decide to use the 50 SMA, that it will actually help you and be able to take out a lot of those errors that you might make on a day-to-day thinking of whether you want to invest in one or take profits from a stock. And now I know a little bit about the 50 SMA. The stocks that I follow, I've kind of overlaid the 50 SMA indicator onto my chart to see how they fare. Will you use the 50 SMA in your investing, or are you going to use a different SMA? Well, let me know what you guys think in the comments below. I'd love to hear what kind of SMA you've used or what you might be thinking of incorporating into your trade strategy. Or are you going to combine it with another indicator that I haven't mentioned in this video? There even might be a part of you guys that want to ignore it completely, and you have a much better indicator out there that you're following and using in your charts. I'd love to hear what they are. Let me know what you guys think. I really enjoy digging into the 50 SMA, learning about it. In the process, I discovered other indicators that people are using in combination with the 50 SMA, and I'll be covering those in future videos. I'll also be continuing my series on stocks as I'm continuing to come across stocks that I find potential and good growth in and that are exciting to me. So stay tuned. There's a lot more to come with all the price action in the markets. The stock market's taking a big nosedive, but I just see it as a big opportunity for my money to go a lot further and prices not being so high. Stay tuned for more videos on different trading strategies I'll be covering in my videos. Remember to focus on the topics of investing you enjoy the most. It is important to find inspiration for investing continually. This will keep you interested and excited about putting your money to work.